Our next speaker is Darren Stralow, Managing Director and CEO at Bellevue Gold. Darren is an experienced mining executive and qualified mining engineer with over 20 years industry experience. Prior to joining Bellevue just over 12 months ago, he was a member of the senior management team at Northern Star for over 10 years, with roles including Head of Operations and Head of Business Development. He has extensive experience in strategy development and execution, building and operating modern underground mining operations, business integration and transformation, and building high-performance teams. Over to you, Darren.
Look, thank you very much for that kind introduction. Look, on our opening slide, rather than put a nice image up of the ore body, we've put up a table of drilling results. Normally, just putting data up is a bit of an eye glazer, but we've made it the first slide of our presentation because it says more about the exceptional asset that we have at Bellevue than any other data or image. The truth is that the phrase high grade is all too overly used in the gold mining industry and often by operations that aren't high grade. As this table shows, we're consistently hitting over 20 to 30 grams per tonne and regularly getting 100 grams per tonne or more all over our ore body. It's hard to state the importance of this slide for the investor community. Genuinely high grades equals low costs equals high margins means high cash flow, and high cash flow means high financial returns for investors. High grades also mean low carbon emissions per ounce, and this is the backbone of our strategy to be a net zero carbon gold producer. Bellevue's on track to pour its first gold in the upcoming quarter, and this is the slide that says more about what we'll be mining than any other. These grades are the Bellevue point of difference. They go to the heart of the two key messages that I want to impart today: strong cash flow and strong growth. The exceptional grades of the mineralised system that we have at Bellevue mean we stand to get superior returns not just on what we mine, but on what we find as well. So as you see, we are continuing to drive inventory growth as a core strategy in line with development and production, and this approach, which is underpinned by these high grades, is the hub of our strategy to create value for our shareholders. So what are we doing? We're building Australia's next high-grade, large-scale gold mine in the Northern Goldfields, and we're firmly on track for first gold production in the upcoming quarter. The mine is really fantastic. We have the ability to open up multiple production areas that are independent of each other, and this creates flexibility and de-risks the mine plan as we go forward. We've really been focusing on grade control, and that's been driving a lot of these high-grade hits that we're getting, which really underpin the robust, high-quality resource that we have. The underground development rates, it really is a development-heavy mine, but the rates that we need to drive our long-term production forecast, we are already achieving. This turns our focus to, once we get into production, really focusing on growth. This is through optimising the mine plan, optimising the throughput of the processing plant for organic growth on site. We can start turning the drill rigs into more of an exploration focus and start hitting some of the walk-up targets that we've got that we can hit from underground, and really start to extend the ore body that has only really been explored from surface. All the while we've been doing this and busy building a project, we've also focused on the soft stuff, so being ESG focused, having an industry-leading target of net zero carbon emissions by 2026, recruiting a highly motivated, energetic workforce that are really excited to get the project into production, and really embracing our core values to drive value. So I did touch on that sustainability piece, and it's something that really permeates through our whole business. It's a core part of our vision and purpose as a company, and something that is known and understood and embraced by all of our team members. We sit there with industry-leading metrics. We have 40% female participation across our entire business, which is something we're very proud of as a development company. And as I said before, we also had an industry-leading statement that we are going to be a net zero gold producer by 2026, which is well ahead of the rest of the market. The project itself is in the final stages of execution and firmly on track for first gold in the December quarter. We're at the final stages of project construction. GR Engineering is on site doing a fantastic job. We've recruited the entire owners processing team. They're on site as well, and they're really motivated and excited to get cracking with the new plant. Underground-wise, the first few years of production will be driven by sort of up to 5 different mining areas. We have 3 open right now. We've got the 4th one being open this quarter. Stoping actually commenced yesterday with our first stope firing. And all of this is underpinned by the data, which is saying that we are going to have significant high grades delivered, which we released an announcement about a week and a half ago. Importantly, we're fully funded through to first production, and the team is continuing just to execute and get into it. So with that in mind, look, I want to take you through a bit of the growth story of Bellevue. To understand that growth story, I want to go back a little bit, talk about the deposit, where it is and why it's still there, and then go into some of the high priority targets we have underground. So, we are up in the northern goldfields of Western Australia. Sorry, we're up. And we're in the Agnew-Wiluna greenstone belt, so pretty prolific greenstone belt, a lot of majors around us. We have mines like Agnew to the south, Jundee-Wiluna to the north, so you have a lot of 5 to 10 million ounce endowment systems there. We've also got Cosmos, Mount Keith, Leinster, big nickel mines. You've got Liontown's world-class lithium deposit just to our north. So what that tells you is the geological setting has those right mantle tapping crustal scale structures to create significant deposits. We've defined 3 million ounces, but we think there's a lot more there. Zooming in a little bit more on the mine and taking you through a bit of the history. So Bellevue is a mine that's been around for over 100 years and quite well known. It's always been high grade. It's always had hard rock there. And it was most recently mined as an underground mine, a high-grade underground mine in the 80s and 90s. They mined this one lode, which goes through the middle here, called the Bellevue lode, pulled out about 800,000 ounces at 13 grams per tonne. The interpretation at the time was that the ore body was cut off at the south. They couldn't find extensions, low gold price, hard to get capital, and they shut the mine and fully rehabbed it. Now, no exploration for gold was done here for 20 years. Instead, they found a nickel mine. This is Cosmos that you can see in the top right corner here on a different tenement. But Cosmos was the #1 nickel mine in Western Australia, or one of in the early 2000s, and all the Bellevue workings were used for was just depository of the nickel water from Cosmos. When some modern gold exploration was done on Bellevue in 2017, so 20 years no exploration, it was discovered that it wasn't cut off by that original shear, but it actually continued, and there were parallel veins. So the first one that was drilled was a hanging wall vein called Tribune, which sits here in the hanging wall. We have Bellevue South and Armand in the north, flat dipping lodes connecting them, like Viago here. Then importantly, a fully below surface, non-outcropping virgin lode called Deacon, which sits in the footwall over here. And these are all the same rocks as Bellevue, the same widths, the same grade, and that's been proven up by the drilling. When you flick around underground and have a look at it, and I really like doing this in the 3D because it gives you an outlook of how it all looks. Sorry, I'll make that a bit bigger up there. But how it all looks, but you can really see, put it on a view like that. You've got your hanging wall lode out here, Bellevue South, Armand to the north, flat dipping Viago connecting, and then the Deacon lode out in the footwall. And that Deacon lode has been defined to be 1.3 million high-grade ounces to date, and we're just about to start our development into it now. We're doing grade control into it now, which is very exciting for us. We have an infrastructure corridor that we've built, 15 kilometres of development that sits right in the middle, gives us those future drill platforms. And what this allows us to do is really expand on the drilling that we've done to date. So there's over 600 kilometres of diamond core drilling done. And what you can see if I put an angle like this is that in that mine corridor, there's quite a bit of drilling done. So that de-risks our mine plan, really defines what we've got. But outside of that, not a lot of drilling. And these are areas that we can target from underground and look to expand, and we already have targets down, particularly in the footwall there. But going on to the grade control and some of the stuff that we're going to see early in the mine life. So these are some of the hits that we released a week or so ago. Two of the highest grade hits in the history of Bellevue, 10 at 60, 18 at 52, that literally came in the last 2 weeks, that are really defining this Armand main area, which is some of the base load of our mining in the next 2 years. And what it's done is it's defined a high-grade chute. So if you talk to the old-timers that mined Bellevue in the 80s and 90s, they say that they got these bonanza loads that would drive a lot of value and really outperform the block model. We're starting to see that with the additional drilling that we're doing. So we're drilling everything now at 20 by 10, and it's starting to light up and show some really consistent high-grade zones. On top of that, this is also in the Armand area. We're actually finding some perpendicular loads, so some easterly dipping loads that were in between the previous drill holes. And you can see what's being defined. It's 200 metres of plunge, 40 metres across dip, remains open either end, and you can see some of the hits on the right-hand side there. Good widths, good grade, and these are all bonus ounces that we can mine without interruption to our mine plan. That's going to give us extra ounces per vertical metre. If this goes down to the south of the mine here, we're in the Bellevue South area. We've started our development in here, up on the 1115 and 1095. And what we're seeing is significant outperformance of the block model in the face grades that we're getting through there. And we have a few hundred metres to go of this high-grade development. The orange colour means that this is all being mined in FY24, so this high grade is going to go into the plant in year 1. In this same area, that area that we were just looking at is in this box here. There's an offset fault at the end of it called the Conselma, and the Conselma pushes the ore body down about 120 metres. On the other side of that fault, we've defined the Bellevue South. We've defined it over 300 metres of strike down here from the drill platforms that we've had. It's open to the south here. I'll touch on this a bit later. But there's 0 drill holes in there, no drill platforms to get it, and this is something that we're obviously pretty excited to target from underground. And you look at that box on the right corner, this is that 1095 ore drive that we were talking about, but you can see some of the phenomenal grades that we're getting just as we come into the edges of this area. You can see the face number, there's face 14 of that drive. It's going to be a long drive. One of the modern exploration techniques that's really been utilised to find the additional loads and the additional gold at Bellevue has been through geophysics, downhole electromagnetics. The geologists on site call it the magic wand of exploration, so you're not just looking at structure, it actually, due to the high pyrrhotite in the ore body, it lights up like it's a base metals deposit. And we have a lot of untested downhole EMs that we've needed drill platforms for that we're looking very forward to exploiting. So jumping back into the 3D, I'll take you through some of our priority targets down in this southern area. So this is that offsetting fault that I talked about before, and you can really see it on the flat dipping Viago where it offsets like that. That Bellevue South original sits there. This is the extension here that's undrilled, and you can see a significant distance away there's existing downhole EM plates which indicate it may continue. Looking around, down the bottom, that structure at the bottom is the high-grade Deacon structure. You can see that continuing all the way through to that Conselma fault as well. That's not drilled on the other side. So the ability for the high-grade Deacon lode to extend beyond that fault to the south also exists significantly. You can see that in sort of 2D here. There's a gentle plunge to the south in the ore body that is sort of a very good target for us when we get underground. We'll put a drill drive out there and we'll drill it out and look to expand all the way down to Southern Bell, which we've got Bellevue rocks, Bellevue width, Bellevue grades already defined. There's also the potential for further footwall loads. So a few years ago, Bellevue drilled a surface hole 1.2 kilometres to go through Tribune, through Bellevue, through Deacon, and see and test the theory for a further footwall structure. This was also chasing downhole EM plates and hit width and grade down there. This is something that, if you're a developer explorer, you can go pretty broke pretty easy by chasing it, but we're going to have development circa here within the next 12 months, and we can start targeting this lode with 300 to 400 metre deep holes, which from underground at a lower drill per metre cost is going to give us a lot of bang for buck. From a mining perspective, we have set up the infrastructure for growth. It is a mine plan that we're not just mining one area at the same time. So this is the the plan for FY24. And you can see that there are multiple work areas. So you're not just chasing one shoot to the centre of the earth, you're chasing multiple shoots, and in all of the multiple areas you're chasing them, we already have these high-grade hits. We have the same setup for FY25, so again, we're into Deakin. We're looking to bring forward Deakin North, which is another significant high-grade area of where we're going. And again, high-grade hits, lots of work areas all through to FY26, and this continues through the entire 10-year mine life that we have designed just on known resources and known reserves at the moment. So look, with this ability to grow from underground, we've got a building contingency to also grow with our surface infrastructure. So we've done that with our processing plant. So we've made decisions early on to do things like upgrading the crushing circuit. So the crusher can do circa 1.7 million tonnes from the outset. This also gives us operational advantages where we can crush when the sun's shining, when the wind's blowing, when we have high levels of renewable energy, and the mornings or the evenings when there's no sun, there's no wind, we can shut down, do maintenance, and then have the spring capacity to catch up when we have the renewables available. But look, we're confident that we can push this to 1.2 with no further capital outlay, and with a small upgrade we can get it to 1.5. But we'll do that when we have the throughput, the run rate in front of us to be able to do that consistently without interruption. So look, I really like these next two pictures. September last year, we had a big football field. We've just done the clearing of the area to put the plant. So that was 10 months ago. This is 10 days ago. We have a almost fully constructed processing plant, and they're really down to the final sort of nitty-gritty when they're putting it together. So, final piping, electrical installation, final alignments, and then getting ready for commissioning with all your first fills, reagents and grinding very shortly. As I said, we've got a full processing team on site. We've got the commissioning team flew up to site last week, and that really sets us up well for first gold next quarter, as we discussed. Once we've done it, so when you think about this financial year for us, this is more development this quarter. Next quarter is commissioning, and then we'll be into run rate in the second half, and that's when we'll provide our production and cost guidance. And why are we confident? Well, we're seeing it in the data. Like, we've seen it in the drill holes. We're now seeing it in the faces as we develop along. In different areas of the mine, different drives in those areas, we're seeing consistent, thick, high-grade areas. We have 30 active headings underground for the 4 jumbos, and we're achieving the production rates, as I said before, that we need to for achieving full throughput from the mill, pre-turning it on, which is exactly where we want to be. And then I made a comment the other day trying to have a bit of fun that we've got more hits than Taylor Swift on here. It was a callback to Peter Cook saying he had more hits than the Beatles, updated to the new generation. But this is what gives us a lot of confidence with Bellevue, is that we've got multiple mining areas, a de-risked mine plan, and each of those areas that we're going to mine has real data that backs up the fact that we're going to be a high-grade, high-margin mine. So what does this do for us, and how does this position us as a company? There are not a lot of companies around that are going through what we're doing, a significant development project coming online at a time in the market where we have strong gold price, we have good interest in gold miners, we have a lot of organic growth potential against a sector backdrop of declining grade, lack of exploration success. So we think we're in a really strong position, and there's been a history of companies getting re-rated as they move from developer into producer. You see the famous Lassonde curve down there on the bottom left. Look, we have to get it right, we have to commission, we have to hit run rate, we have to deliver cash flows to the market. But we've put the case study of Capricorn up there because, I think, Clarkey and his team have done a fantastic job of, sticking to their skill set, building projects successfully, hitting run rate, delivering consistent results. And what we've seen is the market rewarding that and delivering significant value to his shareholders. And we are looking to replicate that and deliver that significant value to ours. Thank you very much.
Thanks, Darren. We have time for one question. When you say December quarter for first gold, will it be early or late in the quarter?
Look, awesome question. So look, where we are in the cycle now is we have all of our costs locked in. The ability for any component of the build to blow out and cause us any issues is really diminished. So therefore, it just comes down to timing. There's a cost of doing business. So for every day that we delay the commissioning, the CapEx essentially goes up because those costs are capital rather than operating. So it's in our best interest to try and get it into production earlier in the quarter than later in the quarter. Look, I always enjoy spending Christmas with my 2 young kids and my family, so I'd rather not be north of Leinster in the hot weather doing it at Christmas time. So we'll try and get it done well before then.
Great, thanks and good luck.